Let's get into the possibility of Tether selling all their Bitcoin. What does that mean for the market? I'll break it down for you. My name is Paul Barron. Welcome back into Tech Path. I want to thank our sponsor today. That is Tangem. This is a great place for you guys to get in on your self-custody journey. And it's very easy to do. All you have to do is jump over to Tangem's website and, of course, get the card. It's very easy to set up. It's going to become your secure crypto and hardware wallet. And it's super simple. It's by far one of the best wallets I think that's out there. So check it out. Hit the Get Tangem button. That's going to take you in to order your 3-card set. Use that. Use our code down below to get started. All right, so we've got a little bit of a battle going on right now between JP Morgan and Tether. Tether CEO is a little bit salty with the JP Morgan analysts, mainly because they were discounting his company, but they were talking about some things within this that if they want to do some business here, they're going to have to sell their Bitcoin. This is the most extreme scenario. JP Morgan discounts the fact that Tether's group equity is over $20 billion on their liquid assets and is generating more than 1.2 in profits. So this would be adapting to new regulations, would be very straightforward for the company. So their analysts are estimating that about only 66 to 83% of Tether's reserves currently comply with the U.S. stablecoin regulation. So if they need to come on shore, most likely they're going to have to be able to go into U.S. securities more often. So this could put a little pressure, but at the same time, this is FUD that we've seen quite a bit before. Tether analysts say that JP Morgan does not even have enough Bitcoin. Their situation, though, is a little bit different versus Tether, where they own almost 8 billion in Bitcoin versus JP Morgan around 1 million. If you look at this article right here, JP Morgan is increasing their crypto holdings via ETFs, but they're staying cautious, which is expected, especially understanding JP Morgan and Jamie Dimon, who's not been a big fan of Bitcoin in general, but their exposure to Bitcoin right now is through ETFs, not even, $1 million. So really negligent for this major organization out there to not be exposed to this asset is kind of crazy, but it is. They hold about 39,000 worth of Ethereum shares. Again, very, very low overall. Other things that are happening right now, if you look at the price of gold, a lot of people saying, all right, well, if we continue to see the pressures on the market, including CPI, PPI, all of these numbers pushing, you've got the tariff concerns, and of course you've got the scenario of gold starting to get more vaults in there in terms of people holding. Brinks, JP Morgan, obviously the COMEX on gold is going up, and of course the price of gold also going up. So a lot of people concerned about that when you look at the general market conditions right now around inflation, which is the big factor here. Gold could be a leading indicator, though, for Bitcoin. And that's the thing that we're looking at right now, the red line there, obviously gold. But you look at where Bitcoin is and holding, is it a lagging or is this a complete separation of the asset? Now, granted, we've seen times before, if you look back here in 2020, where gold skyrocketed, Bitcoin kind of went sideways for a while, and then right around the end of 2020, Bitcoin skyrocketed and started to overperform for a long period during that bull run and then down. And then since then, Bitcoin and gold has pretty much been somewhat lockstep here, even with the separation back here in mid-2024, before we saw the rise on Bitcoin to its all-time high. So interesting statements right now. This gold will be, I think, a big factor. Gold, I feel like, is more locked at the hip right now with Bitcoin than even the S&P 500. So, all right, so this could be, when you look at inflation, this could be the worst pivot in Fed's history. And one of the things you have to look at is just the CPI that's risen to a 7-month high. PPI just hit its highest since February 2023. So this is pretty hot when you look at the incoming. So is it a position right now where you have Donald Trump saying we're going to get lower interest rates, and now the Fed probably backed into a corner to at least be flat again, but possibly even raising rates? My question to you guys, leave some comments down below. Do you think if the Fed comes in and raises rates on the next FOMC meeting, what kind of damage would that do to the market? Let me know your thoughts on that. Let's go into a clip real quick. I want to get into this one because this is where they actually say the words that the Fed should hike. Take a look.
You were not convinced that the inflation bugaboo was laid to rest?
I wasn't at all, and I think the only surprise to me was so many news outlets yesterday calling it a surprising upturn. There's no, as you said before to Rick, there was nothing surprising about it. My principle is very simple. if you double the balance sheet at the same time the fiscal deficit is being increased, as in 2020, 2021, and take interest rates down to zero, forget it. You have created inflation. It is not a case of you're depending on housing versus non-housing, and housing cost is coming down. Eggs. Yeah. Something else will pick up because there is a lot of liquidity. So there is nothing surprising. And I think the Fed should react next month at its meeting by announcing a hike in the interest rates.
Next month?
Next month, March 19th.
It will never happen.
They will not happen.
Because it makes too much sense. I think Trump would the president would blow a gasket if there was a recession. Isn't there a possibility of a recession in the next 4 years?
I think there absolutely is a possibility. In the next 12 months, I would say the possibility is around a 15% level. So it's not zero, but it's certainly not our base case at this scenario. Yeah. We're still seeing a lot of resilience in the economy. Consumers are still spending, businesses are still investing, but we're losing momentum. They are doing so at a noticeably slower pace. So the risk is that we, again, continue to choke off positive growth, and then the risk of recession rises as we look out several years.
All right, so a lot to unpack there. A couple of things. Yes, we could be in a scenario where we already are in kind of this pseudo-recession. If, of course, Powell comes in and actually raises rates next month, I think that would be a pretty much a big indicator that we've entered. Now, the point she was making is that the economy is still strong. I still don't see that. I'm seeing much more problems in the economy right now. Obviously, this is left over from the past administration. Trump's going to have to fix this. It is going to be a scenario that we have got to do. I don't know if these tariffs are going to help, and I definitely don't know if we continue to see the pressure on businesses not knowing what the outcomes of the markets are going to be, that they're not going to hire, and that's going to create joblessness, and that's the problem that Chair Powell is going to have to deal with. So with all that being said, you've got Bernstein now doubling down on Robinhood with their price target after their crypto-led record $1 billion in Q4 revenue. This is insane. Of course, now remember, this happened during a good upswing in crypto overall, but beating the estimated of around 944 million after a 400% surge in crypto trading volume. This is big news for Robinhood. The question mark, guys, is whether or not this holds through this bull market, if in fact we are still in a bull market. Everybody's asking that question. A couple other points here. They were talking about Q4 election quarter, big crypto, and obviously we saw the high there in early December. Robinhood now decisively turning around to positive EPS. So this, I don't know, this may be a little bit early for Robinhood to at least to raise their expectations this early for those analysts. I want to go to a couple of clips from Vlad. He's talking about crypto being the big story. Take a look.
Yeah, Q1 has been strong so far. We've seen the momentum continue, and you know, crypto's been a big story. Obviously, it's done well since the election, and our crypto revenues were up 700% year over year. Crypto volumes up over 400%. But it was also a balanced quarter. I think one of the main advantages of Robinhood as a platform for our crypto traders is you can also trade options and equities and futures alongside earning a high yield on your cash. And so there's just many reasons why you would move your assets into Robinhood. And that drove net deposits to over 50 billion for the year, which was up a very large amount over the previous year. So crypto, I think, gets the headline, but it was just a diversified quarter with, you know, now we have nine business lines generating over 100 million in annual revenue.
This has been a good, I think 24 was a really good year for Robinhood, and it showed on their stock price. It is a performance factor that I think we are nearing a new kind of economic pressure that we haven't seen before, and that is all of the Trump-induced pressure on the economy. There would be one thing. I think this is the thing that you have to consider for Trump. If he does implement these tariffs, there's only one alternative, and that is you pretty much have to strip out taxes. So if you're going to gain revenue in other ways, if Trump were to announce a major tax hit in reference to the United States, Americans, that would basically be maybe we wouldn't see federal income tax in 2025, something like that, that would be a stimulus going forward. Now, that would be the alternative to something like that, but it would put some pressure on a lot of these companies. That's a question, I think, for Robinhood is, can it hold? Can their market hold during what we're seeing right now as the market is today? Again, back to where there's a lot of uncertainty in the market. Well, With all that being said, there's still some positive news out there. And the good thing is Solana, of course, Meow, as this is Jupiter's CEO, has become the first major U.S. business banking fintech to enable USDC, let me zoom in on that for you guys, off-ramping on Solana to a business checking account. This is pretty big. To me, this is huge because this will start to possibly foster in two things. One is the potential of more advanced businesses starting to use these kind of tools, and two, dragging the banking industry into this Web3 ecosystem going forward. So good stuff there. And of course, one more thing right here. We want more Jupe. Their buybacks are starting on Monday, so 50% of all protocol fees are going to be going toward buying Jupe, which is, again, just another advantage for the Jupiter ecosystem out there for sure. So that's positive. Other things that are hitting, SEC and Binance are now seeking a 60-day pause on their crypto case. That should be good in general because the SEC and Binance have not had a great, relationship. And the fact they're pausing this could be a good indicator for Binance going forward in terms of growth in the market. And then last up, a couple of points here is just in, this is we've seen already. BNB, this was a meme coin called Broccoli. This is the dog, I think, of CZ. Skyrocketed to $420 million market cap. I'm kind of curious, when you look at BNB versus Solana, in those kinds of ecosystems, which one do you think wins? Let me know in the comments down below. All right, if you guys are not part of the Diamond Circle, get in right now. It's a great place to get additional content. Join our Telegram group. We leave a link down below. I'm in there every day chit-chatting with you guys. And I love your comments. Great. Keep it coming. And of course, follow me out there on X at Paul Barron. We'll catch you next time right here on TechPath.